that, we will move on, and we have with us Shibani Sircar Kurian, who's a Senior Executive Vice President and Head Equity Research at Kotak Mahindra AMC. Shibani, thank you for joining in. We're seeing a decent move across the board, but it's the IT index which stands out in today's trading session. I remember the last time you joined us, you said that you are evaluating whether to enter the IT space or not. What has happened? It's a month which has elapsed since. Have you entered it? And if yes, is it the large caps, the mid caps, your views?
Yeah, hi, good afternoon. So since we last spoke, there has been significant developments at the macro front, especially where the US banking sector is concerned. And therefore, we believe that in the near term, the IT sector, especially on revenue growth front, would continue to see near-term headwinds. And as it is, Q4 is a quarter, which is a soft quarter on a seasonal basis. So when you look at on a vertical basis, and given the kind of commentary that we've seen from management, verticals such as BFSI, retail, high-tech, could weigh on the near term in terms of the revenue growth outlook. Now, structurally, we believe that the opportunity set that is there for Indian IT services remains intact, while near term there are challenges. And the growth that you had seen, which had accelerated during COVID, is now coming back to long-term averages, and this will be somewhere in the range of high single digits. So that's the kind of revenue growth assumption that we will have to clearly work with. Now, also in terms of deal mix, what we are seeing is that deal mix is changing, especially moving away from the short cycle discretionary spends, focusing more on cost efficiency. And also, given the kind of macro developments that we have seen, it is possible that we will see vendor consolidation. Margins should gradually start to improve with lower attrition as well as wage cost pressures easing. And with this sort of a background, I think, the way we have been approaching the sector has been looking at valuations. And in that context, the large cap segment appears to be better placed. And as I also mentioned that if there is a situation of vendor consolidation, the larger players are clearly better placed than the mid cap in order to navigate these near-term challenges. So yes, valuations have definitely corrected quite sharply, but the mid cap segment is still trading at multiples which are higher than long-term average levels, which is why our preference is for large cap over mid cap.
Okay, your preference is for large caps over mid caps. But just to come back to IT, I didn't get what your view is. Are you looking to buy IT now? Because as we head into Q4, one expectation is that large players like Infosys may perhaps bring down their, or rather give a bleak FY24 guidance. And that may not bode very well with the stocks. Your thoughts? We'll be getting the numbers in a few days from now as well.
Yeah, so Sonia, we have been cautious on the IT space for a while. We incrementally will keep evaluating like we discussed last time. But in the interim, of course, new developments have taken place, which has resulted in some weakness coming through in terms of the revenue growth expectations for the sector. Also remember that while expectations have been cut in terms of earnings for the near term, overall, if you look at FY25 numbers pretty much have not been cut much where the sector is concerned. And therefore, management commentary is likely to be something that we will have to watch out for before taking a fresh view on the sector. So near term, we are approaching the sector slightly cautiously. And wherever there are corrections, especially where large cap IT is concerned, we would look at evaluating and adding some position. But near term, wait for management commentary before deciding on the fresh view on the sector.
All right, Shibani, but there's plenty of uncertainty in the globe, right? Would you rather stick to some domestic themes? In the past, you've mentioned there are various domestic themes that you would like. Do you hold on to that thought? And if yes, what are the themes you like at this juncture?
Yes, Nigel. So our view has been for a while that this is going to be a year where we will have to continue to contend with volatility. This is also going to be a year where likely between stocks and sectors, there is going to be a wide dispersion in terms of earnings outcomes. And therefore, one would have to look at companies on a stock specific basis, looking at earnings trajectory and valuations. In this sort of a framework, the domestic-facing companies appear to be better placed than companies which derive demand from global factors, and therefore that thought continues. In terms of sectors where we are positive on, so banks continue to remain one large space where we remain positive, especially the large private sector banks. Industrials, capital goods, and manufacturing is the second theme that we are playing in our portfolios. Third would be automobile as a sector, and incrementally even cement as a space is something where we believe that valuations are favorable and the outlook in terms of profitability is showing signs of improvement.
You said you like manufacturing. How close are we to a revival of the Capex cycle? Just wanted to ask, because after a very long time, we're seeing L&T at the top of the table, up 4% as we speak. We have seen big moves in a lot of these earlier manufacturing names, some themes like defense, railway manufacturing and indigenization, etc. But just the large, broad Capex cycle, how are you looking at that?
Yeah, so you're right that the private Capex cycle is something that has eluded us for a long period of time, and we are all waiting for that Capex cycle revival to take place. However, so far what we have seen is that the growth in terms of public sector Capex continues to remain strong, and that is what is driving the order flows across companies. In terms of private sector Capex, there are a few segments where we are seeing improvement in terms of capacity utilization. However, it's not been a big improvement where new orders have come through, where or large private sector Capex announcements have taken place. The hope is that over the next year and a half, you will start to see some of that come through. At a headline level, capacity utilization across industries are back now to long-term averages, which should aid incremental Capex, and also corporate balance sheets are far stronger than what they have been in the past. So therefore, we are still not seeing a huge revival where private sector Capex is concerned. However, investments in sectors such as, for instance, as you correctly mentioned, defense, renewables, battery storage, all of these are also new areas where you're starting to see order flows, and that is leading to the the buoyancy that you're seeing where the entire industrial infrastructure space is concerned.
Okay, Shibani, we leave it at that. Thanks a lot for joining in, and thanks for giving us your thoughts on CNBC TV18. By the way, the market is still going strong, not giving up on any of its gains. The Nifty, in fact, could end at the high point of trade. Just look at that. In the last 10-15 minutes, there's a sudden bump up.